Hey everyone, welcome back to Nadlin Forum Podcast Daily. I'm Ruby, joined by Lior. How you doing, mate?
I'm good, Ruby. How are you? We have a big topic today, yeah?
We really do. So we've got the September 2025 ICE Mortgage Monitor report landing on our desks. And honestly, these insurance numbers jumped right out at me. Almost $2,500 per year on average, just for property insurance. That's nearly 10% of the average monthly home-related expenses now going straight to insurance. That's wild, right?
Yeah, it's actually pretty shocking. When you think about mortgage principal, your taxes, the usual stuff, that's supposed to be the main deal. But now, insurance? It's rising faster than anything. Up 70% in the last 5 years. I mean, the rest of the housing costs are like, 23% to 27% higher since 5 years ago. But insurance basically just ran circles around them.
I know, and it's not just numbers on a page. I gotta share. When I first moved out, hunting for an apartment in Sydney, I was so focused on rents and location, and can I squeeze a second-hand freezer through the stairwell? The insurance talk didn't come up till my second viewing. I was floored by how much it added, and that was years ago. Now for folks buying, it's like, forget the mortgage rate, it's the insurance quote that's breaking dreams.
It makes sense. Even if rates drop a bit, your insurance can just ruin the whole budget. People are out here planning for $2,000-$3,000 swings. That's a new deal breaker. Used to be jobs or credit scores that knocked you out of the market. Now it's just, oh, sorry, your premium went up.
And it's not just fees. It's the uncertainty too. Like, what will my premium be next year? Makes it so hard to budget or plan for the long term. We talked before about barriers faced by first-time buyers, like in our episode about rising homeownership age. This insurance surge, it's got to be the biggest wildcard for new buyers now.
Absolutely. And if we start looking regional, it's even more dramatic. The South is getting hammered the worst. Like New Orleans, it saw premiums go up over 50% in just 2 years. People there are paying, on average, more than $3,500 a year just for insurance. Atlanta, Houston, even further inland, they're now catching up with coastal risk zones, mainly because of tornadoes, hurricanes, hail. It's not only the coast anymore.
Right, 8 of the top 10 fastest growing insurance premium cities are in the South. Jacksonville, Tampa, Orlando, they're all up by about a third in just a couple of years. It's wild. And then California, let's talk about that. The Pacific Palisades fire alone destroyed billions in property. LA had $51.7 billion in homes lost, and it's getting harder and harder to insure anything in the wildfire zones. State-backed plans are basically the only game left in some areas.
Yeah, and that's a big contrast, In Israel, insurance is a fraction of the cost for what you'd cover in the US. Their catastrophe coverage is mostly centralized. Here, you get pushed to state-run plans only when the private market bails out. California's FAIR plan, Florida's Citizens, both just packed with desperate homeowners who can't get private cover anymore.
That's such a tangled issue. Should regional risk play this big of a role in whether you can afford a house at all? Obviously, risk is real. You can't ignore hurricanes and wildfires, but some places seem basically blacklisted by private insurers now. Makes me wonder if there needs to be a more even system or, something so it's not just luck of the postcode.
And when people can't even get basic coverage or it's basically unaffordable, we're already seeing the impact. Folks moving, investors pulling out, and entire neighborhoods changing. It's not just a local thing. It's nationwide market dynamics being rewritten just because of insurance costs.
Exactly. And it's so different from, say, interest rates, which are felt pretty consistently across the country. These insurance jumps? It's like two completely different Americas. One where you can still buy and afford the long-term risk, another where not even state insurance can keep you in your home. So pulling it out, big picture, why are premiums skyrocketing? We have to talk about natural disasters ramping up. No AA says billion-dollar disaster events now happen 3 times as often as they did a few decades ago. That's hurricanes, wildfires, floods. Each one bumps up claim payouts and squeezes everyone's wallet.
You're spot on. The numbers are sobering. From 2021 to 2023, property insurance premiums went up 21%, and wage growth and inflation are nowhere near catching up. That $300 more per year since 2021 isn't pocket change for most people. Between disaster risk, rising construction costs, and insurers getting strict on risk management, we're headed for more years like this unless we see big change.
Totally. And this isn't something people can just cost cut their way out of. These are structural issues. Improvement in risk management, smarter infrastructure investment, maybe more robust state-backed pools. Are these enough to help? I wonder if models like California's FAIR Plan or Florida's Citizens could, be improved or even replicated elsewhere? Or is it just plugging leaks in a sinking ship?
It's tough. Maybe a combination, right? Policy reform to help spread risk, bigger support for mitigation efforts, maybe more government-backed solutions. But there needs to be innovation too, especially for investors and first-time buyers. We're already seeing institutional investors adapt. Some are even specializing in riskier markets because they have the resources to handle bad years. But regular buyers, they're getting squeezed out, or they move toward areas with lower premiums, even if it's not their first choice. It's starting to reshape who gets to buy where and when.
And honestly, buyers are just trying to hang on. It's not just picking the right neighborhood. It's which disaster can I afford to bet against this year? Not a great place for homeownership or for the broader housing market. I think we're going to be digging deeper into this for a while. Lior, any last thoughts?
Only that until there's substantial change, whether policy, private market solutions, or both, insurance costs are going to keep putting huge pressure on affordability. We saw in past episodes, like when we discussed home ownership trends and barriers, it's always about more than just the sticker price. Now, insurance is running the show.
Couldn't have put it better, mate. Thanks everyone for tuning in, whether you're running numbers for your next investment or just trying to figure out if you can keep your current place. We'll keep following this, and as always, let us know your stories too. Lior, thanks for a great chat.
Thank you, Ruby, and thanks to everyone listening. We'll catch you next time. Bye.